Good morning, everyone. I'm going to get started in just a few minutes. I'm going to be looking at the NASDAQ today. So if you'll give me just a minute to set everything up and we'll get started, okay? Okay, now we're going to get started, and as you can see, I have the Nadex demo account open on one screen, and I have TradingView opened on the other screen. Now, I will be posting a link for TradingView in the description later, so if you'd like to check it out, you can check out TradingView. It's free, and they also have paid subscriptions as well. Okay, just depending on what you want to do with the charts. Okay, so in this case, I've got a NASDAQ, and this is a daily chart. And then over here, I have a 3-hour chart. And down here, I have a 1-hour chart. Now, the Nadex Touch Brackets, I've had a lot of questions about the Nadex Touch Brackets, which I absolutely love. And if you come down here, it's the last one in the list. It says Touch Brackets. They are available on Forex and the indices. So if I click on the indices plus sign, you can see that it opens up all of the indices that have touch brackets. So you have the US 500, the US Small Cap 2000. This is the Russell, in case you didn't know. This is the US Tech 100, which uses the underlying NASDAQ. And this is the Wall Street 30, which uses the underlying Dow Jones. So today we're going to be focused on the US Tech 100. So if you click that, you can see that you have several touch brackets here. And if I click again directly on the US Tech 100, you can see that they open up over here. And each one consists of a floor price, which is on the left-hand side, and a ceiling price, which is over on the right-hand side. Now, here's what you need to know. It's the most important factor here, okay? On the left, which is the floor price, if price touches 66.42, then the trade is exited. Now, if you went long, you would have a loss. If you went short, that means you would have made profit because you would have sold, okay? Over on the right hand side, the ceiling price. Now, if you went long and it touched 67.92, then more than likely you have a profit. But if you were short and it touched 67.92, then you have a loss. Okay? So in this case, I'm using the underlying chart. Okay? Notice I'm not using the Nadex chart. And I like to see what the underlying is doing. And in this case, right now, the 1-hour chart is right at this ATR, okay? And on the 3-hour chart, it's actually reaching up, and I believe it might reach up to this ATR, okay? Now, the first thing that I want to do is say, okay, price is trading at 6,700. Now, do I have a short bias or do I have a long bias? Okay. Now, if I have a short bias, then I'm going to start looking at the ceiling prices. Okay. Now, why would I look at the ceiling prices? Because that is the one that I want to look at for a short position. Okay. So in this case, if I'm looking to go short, then I do not want price to touch the ceiling. Does everybody understand that? So if I set this at 6702, it's going to be a low risk trade, but it's also going to be a high probability that I will be stopped out. Okay? So that is not a good touch bracket for me to do. Does everybody understand that? Because what's going to happen is if this reaches up to 6702, which is about 2 points from where it is, I'm going to be stopped out. That wouldn't make sense. So then I'm going to start looking at 6732. Okay, so if I come over here and I'm going to put a horizontal line here at 6732, and I'm just going to click on it and actually put in 6732. And I'm going to change this to bright red. Okay. So do you see how the 6732 is below the ATR? So again, that tells me that that's not a good area for you to have a stop at. Okay. And the reason is because you have this ATR directly above you. You also have another moving average directly above you. They're going to target that area, okay? They're not trying to run your stops. They're not trying to stop you out. That's just a normal area for people to put stops. Does everybody understand that? Now, if that's a typical area for them to put a stop, why would you want your stop there? And really, if you can see this as 6732, this would be like a stop in the market. So that's not where you want to be. So now let's go up to 6762. Okay, here's 6762. And I already see, okay, that is above the ATR, but is in between the congestion dot. Again, this entire area here is going to be targeted, okay? You don't really want to be sitting there, okay? They're going to target that area because they already know, hey, there's a lot of traders that are going to have their stop sitting there. What is a better area? Let's go up to 6792, which is about here. Now you're above both of them, okay? So you can see the congestion dot is below you and the ATR is above below you as well. But if you enter this, how much are you paying in risk? The red number over here under the bid column, that's what you would click in order to enter this trade. So if I click that, you can see that you're risking $379 to make $221. Okay, this does not make sense to me. It's called an inverse risk to reward ratio. You're risking more than what your potential profit is. Okay. So in this case, this tells me this is probably not a trade I want to do right now. Okay. Now, what if it comes back to this ATR and it forms a bearish candlestick. Then I may want to consider the 67.62. Why? Because price is identifying, hey, they have found resistance in this area, so this may be one that I would want to enter. Any questions on that? Now, a great example of that is if I actually put this line on the chart down here, okay? So now let's pull this down to 67.62. And this is sort of what I want to see happen up here. It hasn't yet, so, but it is a good example. I would want this to form a reversal bar, okay? And once it forms that reversal bar, okay, then you have the potential to enter. Does everybody understand that one? And in that case, again, you use the 67.62. Remember, if it comes up here, it could potentially stop you out, okay? So if you're doing this, you're risking $262 to make $338, okay? Now, how is this calculated, okay? Well, the NASDAQ moves in 25-cent increments, okay? You see this is 6698.25, okay? It just went to 66.98. That is a $1 move using the Nadex Touch Brackets, okay? There are 4 price increments to 1 point. So that tells you it is a $4 move per point. Now that changes according to the instrument that you're trading. For example, the Dow only moves in points. So it's $1 a point. That's easy. The ES also moves in 0.25 increments. The Russell moves in 0.1 increments. So on the Russell, you're looking at $10 a point, okay? Now, I'm going to go ahead and enter this based just off of the 60-minute so I can show you the different ways that you can actually trade this, okay? Now, this is 66.96. The price is at 66.96.75. You're risking $261 to potentially make $339. And let's see if it goes back up there. It might not get there, so we might have to change it. In this case, I want to go ahead and get in it, so I'm just going to change it. It's not going to make a big difference. Okay, so now you're in the market, okay? And you actually got in at 66.96. That's what this average price is telling you, okay? Now, you have a couple of different ways you can now manage your trade. You do not have to let it go all the way up to 67.62 if it is moving against you, okay? You can actually say, okay, if it comes up here and it closes above 67.25, then I'm going to exit, okay? In that case, you would not lose the full amount that you paid. They'll refund the difference between 67 28, which is probably where you would exit at, and what you paid on entry, which was 66.96. The same goes true for the profit side. Let's say, and I'm going to actually expand this. Let's say that it comes down to 66.48, okay? And when it comes down to 66.48, it starts forming a reversal bar, okay? This is the same area that supported it last time. You can see that right here, okay? In that case, you could also exit, but you can take it one step further. You can say, it has a support area down here at 66.48. So you could come in here and you can actually set a target at, let's say 66.50. And then notice that the buy is highlighted because we sold to enter the trade. And now we're going to buy to exit the trade, okay? So I'm going to place the order. Now, when you do it like this, you're setting a target, okay? And that means that the max loss, max profit is not applicable because you're doing it to exit the trade, okay? So in this case, you have to ignore these numbers, okay? Now, that means you have an open position, but you also have a working order. Now, the working order will remain here until either expiration, price touches, or, price touches, I'm going to just say price touches 66.50, and the trade is executed, or it reaches up and it touches 67.62. Okay, so you have three potential scenarios. It could be that in the next 3 days, let's say price only makes it to 66.80. It never goes up and touches 67.62. Now, this scenario is not likely, okay? But let's say that it just kind of sits here and it expires at 66.80. Well, in that case, you would make the difference between 66.96 and 66.80. That's 16 points. 16 times 4 is 64. That's what you made in profit, excluding exchange fees. Because remember, there's 4 ticks to a point, okay? That's 16 points. It's $4 a point. So 4 times 16 gives you your profit. Now, let's say that instead of expiring at 66.80, it expires at 67.20. Well, in that case, because it never touched 67.62, it actually expired at 67.20, then your risk is 67.20 minus 66.96, 24 points. So what is your actual loss? It's 24 times 4. So basically, it's $96 that you would have lost. Any questions on how to calculate that? Now, let's say that it does come down and it does touch your profit target at 66.50. So then what did you make? Okay. Again, look at your average price, 66.96. Okay, your target is at 66.50. If that target is filled, you made 46 points. So 46 times 4 would be $184. Now, as you can see, there are a lot of ways that this trade could work out. You could be stopped out, your target could be hit, or it could not touch the top price, which is 67.62, but just trade in there and it expires lower. So you would still have a loss, but not a full loss. Or it could actually, if you did not have this working order here, then it could go down, move below 66.12, okay? And then you would realize the full profit. Any questions on that? Now, you don't have to put in a profit target. So, in other words, I can actually cancel this profit target. Well, it's not letting me for some reason. Oh, I'm under working orders. Oh, it helps when I do it right. So I'm going to click delete remainder. That's cute. Oh. And in this case, you see the working order is not there. Okay. So in this case, and this is what I actually like to do, I like to watch and see what happens. So in this case, I'm going to put a line right here, and I'm just going to change the color. Okay. So I have a line here that just says, hey, you better watch this area. But then I'm going to have another line down here at 65.92. Okay. So this is potential support, and this is the next potential support. You may actually have one here too. That's actually a better support area there. Now, if they manage to get through that area, then it could be down here. So the next thing I want to look at, okay, I have my support lines marked. So where's the next area that I want to look at? And that would be on the floor side. So we have the ceiling price up here at 67.62. Where's the floor? Down here at 66.12. So in this case, if it manages to break through this area, then the next likely area is down here at 66.11. What does that mean? That means it has the potential to move the full width of the touch bracket, and it has 3 days to do it. Does that mean I'm just going to set it and forget it? No. You're a trader. Your job is to watch the charts, in my opinion, of course. Nothing is going to be as simple as set it and forget it. Any questions on the touch brackets? They're really awesome to trade, but you do need to think through your trade and actually analyze, okay, what's really going on here. In this case, where's the potential for them to target stops? Okay. Now, they cannot see your stops. And remember, this is actually on the underlying instrument. You're trading the touch brackets. Now, if a trader is in here with one little contract, they're not targeting your stops. Get real. They're not going to make enough money off of you to target your little one contract. Okay? But what they're searching for is areas that are known by them, because they've just been used historically as areas that traders will put stops. Okay? And like the last high. So this high here at 6707.75, that's a typical area that traders are going to set their stop immediately above that. So they could come all the way up here to 6712. What's another area? Moving averages. Okay. Moving averages. I mean, everybody under the sun uses moving averages. They're used in a lot of indicators. Okay. So, anywhere where these moving averages are, are likely areas that they're going to put a stop. So in this case, they could put a stop all the way up here at 67.40. Okay. They're going to target that area. Okay. Not because you have your stop there, but because that's a typical area that people are going to put stops. Any questions on that? I know if you trade the Forex market, they have the double O's and the point fives. You never set your stop at the double O's or the point fives because they're always going to target those numbers. They're nice, even numbers, and this is where they're going to target stops. And it's not because, again, it's not because they want your stop. It's because thousands of traders will put their stop somewhere in that vicinity. So would they target, thousands of stops? Sure. But are they going to target your individual stop? No. Now, you can even, and I have traded these off of 15-minute charts, okay? I'm just using the 60-minute as an example so you can see how to enter or exit a trade, okay, using the touch brackets. And always remember when you're looking at the touch brackets, if you're new, you might think, well, is it the bid or the offer? Okay, the blue is always going to be for buying. The red is going to be for selling. So the offer is the blue price, so you're buying the offer, or you're selling the bid, which is the red price. You can also even come down to a 15-minute chart. What is the 15-minute chart doing? Okay. I have traded these a lot off of the 15-minute. I don't normally use a 15-minute. I normally use a 12-minute chart. In here you see the 12-minute chart. So, you could even go down, to say, okay, if this closes above 67.07, I may want to exit. Okay. Again, just giving you general ideas of the way that you can actually use the touch brackets. The 1 hour is a good chart to use on the touch brackets. Now, remember, the U.S. futures primarily will trade during the U.S. session, which is 9:30 a.m. New York time to 5 o'clock. Most of the action stops at about 4. Okay, so you're getting a consolidated day there versus Forex, which actually does trade 23 hours a day. Now, you can see even from this chart that it does trade overnight, but that's not typically where your biggest moves will come from. Your biggest moves will generally come during the U.S. session, okay? And I want to see what kind of reports we have today. I don't think we have anything until 10 o'clock, but I'm not sure. Yeah, we have a CB consumer confidence this morning at 10 o'clock. But now tomorrow, and remember, this would encompass every market report between now and Friday. So tomorrow you do have the FOMC statement, the federal fund rate, and the FOMC press conference. And then you also have the non-farm employment change Friday at 8:30. Those are really substantial market reports, okay? Now, you're not limited to one direction on these either, okay? You can actually go both long and short, and I haven't covered that. So, in this case, let's say that you wanted to do both a long and a short. Let's see, you have 66.12 and then you have 66.42. Okay, if you do the 66.42, how much is your risk? In this case, it's $237 to make $363. Now, is that going to make sense? Okay, so, and that's the one thing I look at. Remember up here, we had just about the same risk to reward. Okay, so if I do this and this one makes money, but this one lost, then it's taken away from your profits. Do you understand that? And you're really not going to come out to the good on that at all. Let's see if there's another one, but there's not another one closer to price. So really, that's the only example I can give you. Sometimes if you're looking at them, especially on the Forex ones, you can actually do a long and a short if you're anticipating a big move. That happens a lot on the British pound. Now, any questions on this at all? I'm going to put this back on a 15-minute and we'll just see how it plays out. At least for a little while. Got plenty of time this morning. Of course, if you have any questions, now would be the time to ask them. Yes, I'm in the demo mode. This is a how-to video. It's not what I'm going to do with my live account. Now, the other thing a lot of people don't realize, do you see how this is touch bracket 4, touch bracket 5, touch bracket 6, touch bracket 9? This is telling you every Sunday you have 4 touch brackets that are open, okay? So this tells me that there's currently 9 touch brackets. So touch bracket 1, 2, 3, and 4, okay? Only 4 is still valid. They opened up 5, 6, and 9. Do y'all see that? And you can see they just opened up a new touch bracket at 10. So now 9 is not valid anymore. Now you have 10. Now again, if you wanted to come in here and set a working order, you could. Or if you didn't like the way price was going, then you could always exit the touch bracket at any time. Okay? You're not locked into a trade at all with a touch bracket. If you wanted to close this touch bracket, again, just click and then set your price. I like to use previous price points. Okay. So in this case, say it closes above this area, you may want to exit. Again, if you did that, remember, this is the ceiling. You're short, okay? So this is where you do not want it to touch, okay? And I like to have that number with setting away from price, okay? You can always say, well, they did open up another touch bracket, okay? So in this case, okay, so you have 6704.5. You could always come in here and do a long position, okay? So now you're long and short. Remember the other one, it was too much risk on it, but this one, it doesn't have as much risk on it, okay? Now in this case, let's say that it comes up to 67.18 and forms a reversal bar. Well, you still have the potential there to make a profit with the difference between your entry point, which is 6704.5, and where you exit when it comes back to here. Do y'all understand that? And in this case, what you want to do is say, okay, I'm long. And in this case, 6672 is the magical number to be stopped out at. Okay. So in that case, I always put a line on the chart to show me where that's going to be. And that will be at 6772. And in this case, I'm just going to use a different color to let me know, hey, this is the floor for this long touch bracket. Okay. And where is the ceiling? Is it 6822? So now you can come and put in a horizontal line for 6822. And we'll put this one in green. So this is the profit potential on the long position. And this one actually is 6612, I believe it is. Yeah. This one is 6612. And so this is on the short side, which is actually right where the support area is as well. I do have a video that explains reversal bars on my YouTube. Hold on and I'll find it for you. Christopher, I just put it up for you. And it's about 40 minutes long, and it does explain the reversal bars. Okay. Now remember, this is the area that I said, okay, if it closes above this area, I would actually look at potentially closing the trade. Remember that? So I'm going to change this one to the dark red because that tells me, hey, I need to pay attention here. Okay. That's an area that if it doesn't clear above that area, then I may want to exit that trade. Now, you can see in this case, you have both a long and a short position on. Okay, there is a potential that both could make money as long as, for example, the short doesn't touch the ceiling up there, or as long as the long position does not touch the floor. You could potentially make money on both sides of the position. Um, you could actually say, I don't really like the way that candlestick's forming. You could take profits early, or you could exit the short position. There's a lot of different ways you can actually trade these. This has about 10 minutes left. So I'm going to go grab a coffee and then come back. But this is one you may want to consider exiting the short position, but you let the long position run. Or you exit the long position and let the short position run if it's moving in your favor. Can y'all hear me now? You can see I just closed out the losing position in the demo, and I'm in one on the British pound dollar. And this is in my live account. I do think it's going to go down. Okay. But if it closes above 31.83, then I'm probably going to exit. Okay. Now, the only reason I entered the one in my live account is because people think, oh, well, if you're in demo, then, it doesn't work the same as in a live account. And that's not true. It does. It just tells me that, if you're looking at it that way, you're not taking responsibility and you're probably not a profitable trader because you're looking for excuses for things not to work. When I'm teaching, normally I'm using a demo because just like that one, I'm entering orders that I know may not work to show you how to do something, okay? But it's okay. You want to see live? Okay, you got live too. Doesn't too much matter to me. And let's see if I can bring this off. Let's bring this one up. I'm trying to get them all on here at once. So now, now you have demo above and you have live account below, okay? Any questions? Is it going to work the same? Touch brackets work the same, regardless of whether you're in demo account or whether you're in a live account. A lot of people will be in demo. They'll make money and then they go to live account and they'll say, oh, well, it doesn't work in the live account. It only works in the demo account. Well, that's not really true. What happens is when you go into a live account, your attitude changes. Your mentality changes. Why? Because you got real money on the line. There's not a difference between demo and live as far as, you're going to make money in demo and not live. There's not that much change. If I go down to the Forex over here and I do the British pound, okay, I'm in 29.59, 32.09. Oh, well, look, there's a pip difference up here. That pip ain't going to make no damn difference. Okay? It's not going to make a bit of difference. And my charts are going to work regardless of whether I'm in a demo or a live account. Sometimes you're going to lose, sometimes you're going to win. That's the bottom line. It doesn't really matter whether you're in demo or live. On the British pound, if you get a bearish bar, you're going to have a hidden divergence there. This is the same ATR that we have on the 15-minute chart right now, too. It just means there's a lot of resistance in that area. And it's also at a 50% retracement line. Now, the NASDAQ is probably going to come back to this ATR at 66.95. And then, if it forms a bullish bar, you could actually even add to your position there. Now, the U.S. cash market did open at 8 o'clock. Let me go. I want to see if I can get the demo for the same price that I got the live account for on the British pound. And we're going to put this at 56 is what I got in that. So in this case, you can see I've got one in the demo mode and I got one in my live account. The only difference is this is $29.58 and this is $29.59. Well, that one little pip is not going to make a damn difference. It's still going to work exactly the same. Support and resistance does not care if you're in demo or live. If the market's going to move against you, the market's going to move against you. If the market's going to move in your direction, it's going to move in your direction. Did I get a little bit better pricing in the demo? Yes, only because I didn't enter at exactly the same time. Now I can take that one off because we're not in that one anymore. And I can take this one off and this one off. The one area on the NASDAQ you need to watch now is 2763.50. And I'm going to make that dark red. That just tells me it's a potential resistance area. Normally I don't mark them on my chart because I'm always looking to the left anyway. But I do suggest new traders actually mark this so they'll remember, hey, there's a resistance area there. You've got one here and then another one here. You can also compare the demo versus the live account. Look at the current price. It's $31.69 down here, $31.70. Up here it's $31.73.74. And I have always recommended that you compare the two because there is a difference between the two. It's not typically a lot, okay? But between these prices, there's only one market maker that provides data in the demo, whereas the live account, there's multiple market makers providing pricing. And again, the demo is on top and the live account is on bottom. Now, right now, I'm just going to mute the microphone because we're just sitting here watching. Unless someone has a question, I'm not going to sit here and talk. I'm going to sit here and look at charts. So, my screen just got blurry. Did anyone else's get blurry? I think it's because I'm using a bigger screen, probably. And I guess it just can't handle the bigger screens. Let me see if I shrink it down. Maybe it does better. No, I actually think that made it worse. Well, since I'm already in the trades, I think y'all can follow along on your own charting. I don't like how blurred the video is right now, so I'm going to go ahead and end it. I'm not sure why it got blurred all of a sudden. Is everybody's blurred or is it just mine? I'm not really sure. All right, well, I'm going to go ahead and end it. For some reason, YouTube's not handling my big screen very well. But y'all can follow along just using Nadex in the charting platform. I do have the floor up here on the British pound dollar. It's at 32.09. The ceiling is at 32.09. The floor is at 29.59. And then on the US Tech, which is the NASDAQ, you could exit. You do have $40 in profit on that one. And then if it comes back, because you have a profit and you're overextended, so then if it comes back to 66.98, you could always re-enter that one, okay? But I'm going to go ahead and end it because it's really blurry on my screen and I'm not sure why, okay? But I do hope you enjoyed it. I hope you learned something new about trading the touch brackets. And then I'll be back later this week. Y'all have a wonderful day.